Hello, I'm Lindsay White, your MC for today's live streamed Ceres 2020 digital program and a director on the Investor Network team here at Ceres. We are a sustainability nonprofit working with influential investors and companies around the world on some of the most critical sustainability challenges we face, from the climate and water crisis to the protection of basic human rights throughout the global workforce. I wish to start today by acknowledging the pain, anger, and despair that many of us are feeling as we look at the images from Minneapolis and so many other cities. While many recent events, including the pandemic, have shined a spotlight on structural racism and inequities in our communities and the world, the death of George Floyd is painful evidence of the racism that so many of our friends and colleagues confront daily. Our values at Ceres celebrate diversity, community, kindness, and fairness. Ceres stands in strong solidarity with the Black community and with nonviolent protesters across our nation and indeed across the world who are challenging systemic racism and inequity. Recent events give us impetus to do more, and we can. We remain mindful of everyone affected directly and indirectly by the coronavirus pandemic. We are especially grateful to those on the front lines, risking so much and working tirelessly to ensure we all stay as healthy and safe as possible. Finally, I also wanted to thank each of you for participating in today's program as we continue what is now this fourth month from Ceres' virtual office. We are inspired continuously by the steadfast commitment of so many to the broad range of important challenges we still face and to our shared long-term objectives. In particular, we wish to highlight and say how much we appreciate the generous commitment and support of our speakers and our sponsors who have stood by us on this digital journey to reimagine the Ceres 2020 conference program. We clearly would not be here today without your essential support. While it's not the same as all spending a few days together at our annual conference, the tremendous participation we have seen in Ceres 2020 over the past months has clearly demonstrated to us that a community of passionate and committed people will always find a way to move forward. Before we begin with today's session, a few logistical notes. First, please note that this session is being recorded. We will be providing all participants with a link to the recording shortly after the session has concluded. If you have any questions for our panelists, please enter them in the chat box that is located in your control panel. We will do our best to answer as many questions as possible during our closing Q&A. Finally, there is a potential that due to global bandwidth issues, we may experience some technical challenges. Unfortunately, that is beyond our control. But if it does happen, please know the program will pause for 30 seconds to allow for global bandwidth to readjust. We thank you for your patience in advance in the event this does occur. With that, I am very pleased to open today's session. By 2050, the world will need 50% more energy, with water stress anticipated to affect more than half of the projected world population of 9.8 billion people. Despite burgeoning growth in sustainable and impact investments, there remains a large gap between current spending and needed spending to achieve the Sustainable Development Goals. Goals such as affordable and clean energy, gender equality, and clean water and sanitation. Similarly, annual clean energy investment continues to track at roughly 1/3 of the annual investment needed to mitigate the worst effects of global climate change. Mobilizing more private capital in this context will be critical to reaching the SDGs, addressing the climate crisis, and building a just and sustainable world. With that, to share their expert insights on this topic, I am delighted to introduce today's speakers. Our moderator, Richard Zimmerman, Senior Advisor, We Family Offices, Julie Davis, Head of Impact Solutions, BNP Paribas Bank of the West, Andrew Lee, Head of Sustainable and Impact Investing, UBS Global Wealth Management, Chief Investment Office, Courtney Thompson, Vice President, Global Sustainable Finance, Morgan Stanley. With that, Richard, I'm pleased to turn it to you to begin today's session. Thank you.
Great, thank you, Lindsay, and hello, everybody. Just a quick shout out to Minnie Luber and the entire Ceres team for being such amazing leaders in the sustainability space. Thank you for all you do. As Lindsay said, my name is Richard Zimmerman. I'm an advisor at We Family Offices, where I head our values-aligned investing service. And today our topic is mobilizing private wealth for urgent sustainability progress. This is an excellent title and theme, especially now. Mobilizing is all about community, partnership, and coming together for action for such an important cause. Private wealth is our field of expertise, and it represents a large and influential pool of capital that we all can help direct towards sustainable initiatives. Urgent, well, I think we can all agree that we're feeling the urgency to create positive change. And of course, sustainability, which is what we are all passionate about, and it is our guiding North Star. Today, we're going to cover 3 topics in a little bit less than an hour, including questions from you all, so please chat away. Topic 1 will be about the sustainable investment movement in light of the current times and also in context of the past few years. Topic 2 will cover how ESG and impact has evolved with our clients and investing in general. And finally, topic 3 will look at future trends in the ESG and impact space. Now, Lindsay introduced the panel, but just as a refresher, we have Julie Davitz, Andrew Lee, and Courtney Thompson. And I'll go to the first question now, and that is on the sustainable investment movement. This will be for all 3 of the panelists. Question is, impact and sustainable investments seek to mobilize capital in a new way, a way that keeps positive social and environmental impact at the forefront and that integrates ESG factors. In this time of pandemic and turmoil, what effects are you seeing on how impact and sustainable investment is moving forward? And in terms of those effects, are there any parallels between the current times and 2008? Why don't we start with Julie?
Thanks, Richard, and thanks to Ceres as well. I think there are a number of similarities between 2008 but first of all, I think that the pandemic has really acted as a spotlight. We have had gradual social change for decades now, but the pandemic has just brought that into high relief. I see a few differences and a few similarities now. First of all, we didn't have ESG integrated in 2008. I mean, there was certainly a conversation about it, but it certainly was not at the level that we have now. The similarities are, 1, uncertainty. I mean, we're all feeling uncertain on so many levels. I think 2 is the collapse of the market, but further with the pandemic, we've got collapse of sectors, food supply chain, healthcare, et cetera, et cetera. And the biggest difference, I think, is the reaction. Now more than ever, I think we feel that we have a chance to do a reset in a much different way than 2008.
Okay, great. I think that's a great way to position it, which is this idea of reset, because even in our personal and professional lives, that's the real common thread that we've seen. Andrew?
Yeah, look, I'd agree with a lot that Julie said. I think what we've seen is people really accelerating or really doubling down on their efforts to invest sustainably or for impact as a reaction to what we've seen. And granted, it's a pretty short time frame, but we've certainly seen it go in that direction, which I think is really promising. So I think what's happened is you've got the motivation for a lot more private investors to really think about how they can, at a minimum, if they're not already integrating ESG or working with managers that integrate ESG. And for many, the conversation is really revolving around going further and how they can put capital to work for positive change. I think My initial thought was actually that we would see a pause, and I think you probably did see that momentarily at the height of the extreme market volatility, but it was actually pretty brief. And since then, we've definitely seen a consistent and increasing focus on sustainable and impact more broadly. Maybe just to complement what Julie said, I think. You've probably all seen the fund flow data from Morningstar suggesting that during the first quarter, you had outflows from traditional funds, but at the same time there were inflows into sustainable funds, and it was by a factor of almost 9 or so in terms of difference. But we've definitely on our platform seen the same trend play out in terms of the full sustainable portfolio solutions that are there. Partly it's motivated by the performance that we've definitely observed, but also you have this longer term realization about the relationship between sustainability issues that, as Julie said, this pandemic and the health crisis have really brought into high relief. So it's actually maybe a little bit surprising for me, but it really is, in the face of volatility, a real commitment to doing more in sustainable and doing more in impact. In terms of differences versus 2008, I think 12 years ago we were experiencing a financial system meltdown, right, which was obviously negatively impacting investments. But what was happening didn't necessarily involve health or safety issues, right, in the same way that you have COVID-19. And so, we can't simply fix the problems that you had perhaps with a financial system meltdown with more capital infused into the system. I think the health crisis that we're experiencing and the impacts that we're seeing on everything from workforce to society to societal to physical infrastructure, we're going to be dealing with this for months and years, right, as we're seeing with return to work plans and so forth. So I think while 2008 was a wake-up call to adjust the stability of the financial system, what we're going through now is really a call to action to address a much broader set of societal issues, some of which frankly are addressable through investments and others, perhaps less so.
Yeah, I think you're raising some really good points. One of the 2008, when the banks were kind of the focus, the headline focus, and now it's the real economy, or I hope it's the real economy. And that plays right into everything that I think this industry is about, the sustainable investment industry. And I love what you're saying about the commitment and the moving forward, and the numbers are backing it too. Courtney, do you want to add to that?
Yeah, I think I'll largely echo what Julie and Andrew have both said. I think that really given the origins of this crisis as a healthcare crisis, I think that has fundamentally shaped the dialogue around sustainable investing and investing in general in the current market. I think that impact and sustainable investors have spoken, really over the last 10 years about these issues of systems level change or systemic issues. But I think this crisis, more than prior ones, is painfully bringing to the forefront how interconnected so many of these issues are, from social issues to environmental issues to healthcare issues to economic issues. And I think there's really a fundamental understanding that what ESG investors have been really good at for a long time, which is looking at all of these fundamental issues together, understanding how they all play into risk and return, is really the path forward that needs to happen. And I think echoing some of the comments that Andrew made about flows data and performance, I think we've really seen that both on our platform and some of the research from our own Institute for Sustainable Investing. We've looked historically at the last 14 years of performance of sustainable funds, and we found that they perform in line with traditional funds, but with lower downside volatility. And that is particularly true in periods of high market volatility. And we've seen that play out over the most recent cycle. And so I think that really underpins this discussion of risk and interconnectedness that I think will shape and continue to shape the dialogue around sustainable investing going forward.
I like what you said about, you think about when you go through cycles, and so you can say ESG is not new, right? It's weathered storms, it's been through storms, and now here's another one. And so even though it's been a short period, maybe it's the pause, as Andrew said, and who knows what will happen next, but it's that group has performed very well, and it's been in other cycles also. So it's not just a new thing, which is great. And I also like, Courtney, what you said about the ESG being part of this, because that's at the forefront of anyone's investment decision now, whether or not they labeled themselves or had this kind of practice of ESG. All of a sudden, it has to be. So it's really brought it to the front, not just to talk about, but to say, whoa, maybe I should integrate this in what I'm doing. Thank you. We'll go to the second question in this topic. Before the past week, COVID-19 had already been akin to a diagnostic die that further exposed deep racial and structural inequities in the world and the United States. Are you seeing that illumination play out and impact in sustainable investment trends? For example, are you seeing greater innovation and opportunities emerge in the S of the ESG, and in what ways? Why don't we start with Andrew?
Great. So yeah, no, I think what's happened with COVID-19 and maybe more recently with the events of the past week, I mean, it's certainly going to shape impact and sustainable. I think these are themes and topics that were always relevant and perhaps have been really highlighted by what we've seen. But it's been a relatively short time frame, as I was mentioning before. I do think that even in that short time frame, we've seen a lot of focus by asset owners, asset managers, private investors on the S issues in particular. And so I agree completely with Courtney that it's all interconnected, and we see it as such. But I think that what's emerged, at least in recently, is really a focus on the S issues. And so some of the specific things that have come up really are around, and this has been in the media too, but certainly from an investor's perspective, all of the issues around employee, human capital broadly, right? But if I think about what's come up specifically, employee health and safety, right? It's important for both the essential businesses that are continuing to operate now and how they're dealing with protecting their employees and making sure that that things are operating well, as well as those that are starting to consider the return to work procedures, right, as these lockdowns start to lift. So, you've seen long-term investors actively engaging around these issues with company management. You saw a letter to Amazon from APG and New York Pensions, right? That's just one recent example. But it's clear that people are refocused or focused very particularly on some of these S issues. Obviously related, you have just general workforce management and labor practices broadly, and how companies are dealing with layoffs, right, in that context as well. Mm-hmm. So I think critical in today's environment, but the materiality for long-term investors, it's starting to carry more weight, and you're seeing people really start to focus on this. Maybe one other thing that I'd say, it's really too early to draw conclusions about trends, as you were saying, but diversity in the fund managers and underlying investment portfolios. And I think that in particular, last week has shown us that's something that's important. We've been focused on certainly the gender part of diversity for some time, supporting fund managers that are diverse beyond what we have today. And I think that that's something that needs to be continued to focus on, but there's lots of room for improvement there. So I think that's something that's very recent. We will start to see that play into sustainable and impact over time.
Right, that's a great point. In fact, we sent out something last week to all our managers about how they're approaching diversity, both at their corporate level as well as how they invest. And they got stuff back right away. I mean, I think there's been real work in this area, so it was really good to see. Julie.
A couple of thoughts around this. First of all, yes, it's a short period of time, but I feel like I'm lucky in the sense of representing Bank of the West, BNP Paribas, that this financial institution has really been looking at these issues of sustainability and resiliency for decades, and just recently, in fact, pushed up its deadline for divestment from coal. It was 2040 and now it's 2030. And my point is that I think that through this short crisis, that companies are really looking at sustainability in a very different way, and governments are getting involved. So in France, for example, the bailout that went to Air France came with a condition that they have net zero emissions in a plan in the next 30 years. And the head of the IMF is talking about, linking their packages to climate change issues. And give a shout out to the MacArthur Foundation, because they are really catalyzing capital in a fantastic new way. So I think, yes, it's a short period of time, but there are a lot of important players that are realizing these topics of resiliency and sustainability are critical.
Right, and that's a good point. I think I saw something about they'll try to do that with the airlines here, but just having it out there, in essence, shows how everyone's pushing forward and thinking of these other things. Really good points. Courtney, the ESG or G or the S or?
Yeah, I think a little bit of all of the above, certainly how companies are governing themselves through this crisis. I think the recognition, building on Julie's point, that the environmental issues and the bailouts, I think underpinning those is really questions about social justice and who will be disproportionately impacted by climate change. So I think climate and environmental issues are social issues as well. But certainly, as Andrew was pointing out, a number of the questions that we've been getting and that we've been seeing in the market, are really amplifying the questions around workforce management, human capital, diversity, how you're treating your workforce. And so I think that's, I think the ESG conversation is evolving and shining a spotlight more brightly on the S issues as it should. I think all of these things need to move in lockstep. But as it relates to innovation too, I guess just a couple other points I would make is that we've seen an increasing call around driving capital through CDFIs, community development finance institutions. I think that is a huge lever and a hugely important network that we work closely with at Morgan Stanley, and I know many of our clients care about as well. I think getting capital to underserved communities, to business owners, to families who are struggling, I think is a key piece of the recovery that really brings together social issues as well. And in the broader markets, we've also seen April was actually a record month for ESG bond issuance, largely driven by social bonds, whether those are companies using ring fencing their use of proceeds for vaccine development, or nationals and supranationals and development agencies earmarking proceeds for pandemic recovery efforts, which I think all of this goes to show that over the last decade of sustainable investing, we've really developed a playbook that has become flexible and that can be used to catalyze and drive capital to solutions in a really rapid way. And the final thing I would just say, I think when you talk about equality and inequality around sustainable investing, I think the other piece to keep in mind is that sustainable and impact investing itself cannot just be the purview of high net worth individuals and institutions. Right. I think that one of the underlying goals we have across the Morgan Stanley Wealth Management platform, and I'm sure Julie and Andrew would share this goal as well, is about really democratizing access to those sustainable investments. And so making sure that, we have solutions at all levels for all clients, not just the high net worth multi-million-dollar family offices, but also millennial and Gen Z folks who are starting out with a retirement plan. Are there sustainable investing options for them as well that are getting to the heart of the issues they care about? And so I think that the inequality questions and access questions need to be both when you think about where you're directing investments, but also who's directing them.
Yeah, that's a really good point, because as you're raising awareness everywhere, then people want to have solutions, no matter what sort of group they're in. We're going to switch on here to the ESG, how ESG and impact are evolving. And we have two questions. The first question is, what responses are you seeing from clients, and how have your client conversations evolved on ESG and impact, both over the past several years and particularly at this moment in time? And this will be for Julie to start, and then Andrew after that.
For years, there's been a real schism between what's happening in Europe with clients and what's happening here in North America. Europe has been much more evolved and moving much faster. When I began 5 years ago at the bank, it was still very difficult to pull out these conversations, both with advisors and with clients. But the conversation got easier and easier. The media translates this, and it's become more mainstream. Obviously, in parallel to that is the development of products that have come about. I think the change that's happened just most recently is that people are, I want it now. It wasn't, an esoteric conversation. It's, we need this today. And I'm thrilled with that urgency, because that's really what we've all been waiting for quite a long time. So I think that in all of the sadness and crisis, there's an enormous opportunity for us to use our levers of finance in the best possible way.
All right, good point. Thank you. Andrew?
Yeah, I'd agree a lot with what Julie said. I think the client and my team and I look at we have conversations across the globe. So I completely agree with the schism between what we see in the U.S. and the evolution here versus what we've seen in Europe. And certainly Asia, but the evolution of the client conversation has been pretty significant in recent years. I think we all know the trend. The people continue to recognize that ESG factors really do matter for financial performance, and whether, as Julie said, it's because it's in the news every day, right? And you're seeing these connection points between sustainability incidents, let's say, both on the risk and the opportunity side, but also in companies that people are familiar with, that they own in their portfolios, right? And it's not this complete separate set of companies. It's not all about renewables. And I think, for many people, that's still a new conversation, right? These are actually companies that they have found in their portfolios and that are being affected by whether it's an E, an S, or a G issue. So I think the media attention, the attention from all of our organizations has also helped to propel it into the mainstream. And that conversation around I want it now, not just I'm planning for the future, is very germane. And I think the product set has really filled in behind that quite nicely. And so, all of our organizations as advisors are able to provide people with full portfolio advice, as well as the ability to slowly step into something with individual products or what have you. So I think that conversation continues to happen over time. But that's a broad conversation, right? How do I ensure across my portfolio that all of those considerations are being taken into account? I think the client conversations today are on that, but they're also on this impact piece that we were starting to get to just now, right? It's like, how does my capital actually contribute to positive change, right? Whether it's in the communities through CDFIs, or whether it's more broadly with some of the environmental issue, the climate issues that we continue to see as broad and affecting the future, right? So it's the acute issues that we're facing as a result of what's happening right now, but it's the broader long-term issues. So, I think the other thing that I'd maybe point out is that with all of this knowledge over the past couple of years, where the conversation has evolved to is much more away from this binary, particularly in the US, like, am I doing sustainable investing or am I not, to the different types of impact that you can have with different asset classes or strategies or exposures within your portfolio. And the understanding of how you can actually affect positive change has significantly shifted, right? So just from owning shares of a company whose products and services are better or who operates better than peers, that's one thing, versus actually driving strategic change, right? Whether that's through engagement or owning private equity. There is a distinction there, and I think many more people appreciate that distinction versus a few years ago. So, so that's a big that we've seen.
That's great, great insights. Thank you. We're going to speed up this next question and then go on to the third topic. This is start with Courtney. It really has to do with stumbling blocks. So, and how are you overcoming them? And some of this has been covered, but it'd be great to hear your insights. In pre-pandemic times, what were you seeing as the key stumbling blocks to greater sustainable and impact investment? And post-pandemic, have they changed, and in what ways? And we'll start with Courtney, and then we'll get to Julie.
Great. Yeah, I think ironically, one of the stumbling blocks in especially more recent years, is it has not been the availability of sustainable products. But I think for many clients, and again, I'm sure Julie and Andrew have seen this play out as well, but it's really understanding, are the investments that they're making aligned with their unique sustainability goals? I think, as Andrew just said, it's not, the conversation has evolved beyond, am I sustainable or not? It's how sustainable are my funds, are my investments? Are they aligned with the specific issues I care about, whether that's education, racial diversity, social justice issues, climate change? I think these are the crux of the questions that clients have, especially when speaking with their advisors. Clients are of course used to seeing their quarterly financial statement, but beyond the kind of beautiful brochures, kind of understanding really what's happening under the hood of their investment portfolio has really been a stumbling block, I would say, to furthering the conversation. And so that's something we've spent quite a bit of time on at Morgan Stanley. There has been also proliferation of ESG data in the market, but it was not designed to put clients at the center of the conversation. And I think in order to really have those meaningful conversations with clients about their investments and to drive further investment, they need to understand in a data-driven, granular, and transparent way what sustainability means and how that's playing out. So we've spent quite a bit of time. We actually launched a proprietary impact reporting tool within Morgan Stanley Wealth Management. It's available today as of last summer on the desktops of all 15,000 financial advisors. And it's really unlocked some really powerful conversations with clients about where their portfolios are positioned today as it relates to, again, those specific sustainability issues they care about and how they might realign those portfolios over time. Every client has their own unique financial goals, and it's the same thing when it comes to impact and sustainability. And so I think, pre-pandemic, it was already unlocking these great conversations around climate, around diversity, around a lot of these key topics. And in response to client demand, we've added new transparency into issues like underground fossil fuel reserves and more nuanced ways of looking at employee engagement. And while we have over 100 issues available on the platform today, I think the pandemic, frankly, is already raising kind of new questions that clients are going to want to care about. And so having these systems in place and the ability to expand them over time, I think is a critical stumbling block that needs to continue to break down, and I think will really drive further investment and catalyze greater sustainable investing in the future.
Right, that's really interesting, and I know your firm and all the firms of the panelists have really been at the front of this, and a lot of advisors, but being able to tell the story beyond the financial now, it's all coming together. So these conversations are much more fulfilling and impactful. Julie, you want to add on to that? Do you have anything on this kind of stumbling blocks and getting over? Maybe you're not hearing me.
I do. I think initially there was still a big issue with education.
Yeah.
I can hear you. I can hear you. Can you hear me?
We can hear.
We were still dealing with the issue of education of companies integrating ESG. It's not easy. These are complex systems. I think as we work through this, it's become much simpler, and clients and companies are looking at ESG as a way to really avoid material risk. And everyone wants to de-risk their portfolio. So I absolutely echo what Courtney said, and just add on the issue of ease. There are so many more tools now. We have an app for clients called My Impact. We work with Open Invest so clients can design their own impact portfolio. These things didn't exist, several years ago. So I think this is just getting simplified, and that will help the space grow as well.
Great, thank you. And Andrew, if you have anything real quick, because I know you guys develop a lot in this space too.
Nothing to add here on this one. Let's see.
Okay.
Richard.
Okay, thank you. Part 3, it's our final topic, and it has to do with ESG and impact trends. Question is, what trends are you seeing in capital moving to impact investment opportunities? Is this playing out differently across different asset classes, and in what ways? And in what ways? And we'll go through all the panelists. We'll start with Andrew.
Great. So, I guess when you call out impact specifically as distinct from sustainable, it's, where you're really trying to make that positive change with your capital. So, there are a few things that I'd say. I think one thing that we've seen is the use of engagement, whether it's in public equity or public fixed income, as a way to really drive corporate change, and in a demonstrable and measurable way. And I think that this is something that you see on a one-off basis with companies, and also on a more consistent basis with more and more solutions featuring engagement in a more prominent way, where it's always been a tool, but I think that you've seen that really come to the fore in recent years. And I think it's particularly important, right, as people kind of appreciate the distinction more and more between, what you're actually doing with your capital in owning a set of better companies that are performing better or aligned to, the themes that we were talking about before, versus if you actually care about healthcare issues, if you actually care about emissions, how do you take that out of the system versus saying, well, my portfolio is better than the benchmark, therefore, I've achieved something positive. So I think think there's a real focus on that, and I think engagement in the public markets is really a path to achieving that, and we see that that being something that's interesting and attractive for investors. I think in fixed income, something that Courtney mentioned before certainly is the rise of social and sustainability bonds, sustainability linked structures, which I think is great for all of us to see, right? And I think that corporate acceptance of tying, whether it's the financial metrics or the rates that they have on structures to sustainability metrics, I think that's closely tying and recognizing the linkages here. So I think that you'll continue to see an expansion in social and sustainability bonds, and that really ties nicely to the whole investor preference concept that we all talked about, right? With investors really wanting to see how the use of proceeds are actually being put to work, as opposed to just broad sustainability within a portfolio. So I guess maybe the last thing I'd leave you with is that, we continue to see, private markets has typically been where you've seen that intentional impact. And I think you continue to see expansion beyond just kind of growth equity and venture to private credit, real assets, where a lot of that work has really been done by many impact investors for years, but you're starting to see it, expand into the more commercial solutions, which is great. So those three.
Great, thank you. Good point, great points, Andrew. Courtney.
Yeah, I think really echoing a lot of what Andrew said. I think maybe one kind of set of data points that might be helpful to add to the conversation is through our Institute for Sustainable Investing at Morgan Stanley, we regularly survey different pockets of investors, individuals, institutions, and asset managers. Our most recent findings that we actually just published last week of global asset owners, I think had some interesting stats on this front about kind of where capital is moving. At the highest levels, 8 and 10 global institutions are now actively instituting sustainability into their portfolios, either across their entire portfolios or part. Another really interesting finding was that 6 and 10 of those asset owners foresee a time when they will only allocate to managers that have a formal approach to sustainable and impact investing. So I think we're seeing a dramatic shift looking ahead. When it comes to asset classes, among those, that 80% of global asset owners that are already actively implementing sustainable investing, of course, not surprisingly, the majority of traction is in public equities, closely followed by fixed income, where half of those investors are investing in green bonds or green bond funds. But when we ask specifically, which to your question around impact and thematic investments, I think it was given the timing of our survey, which was just prior to the pandemic, the environmental issues were the #1 issues. Climate change, water solutions, plastic waste reduction rose to the top for investors. So I think that's where we've been seeing the capital move. Among the social issues ranked just after that were around diversity and education. And I would imagine that, next time we do this survey with the pandemic, hopefully behind us at that point, I think we will see a reshift of those categories. I think if any of our recent conversations are any indication, I think healthcare and social justice will certainly continue to rise in importance when it comes to those impact and thematic investments, which, as Andrew said, are the ones where you're really measuring that positive impact and additionality. So just some data points, I think, to drive some of that home.
Which can be expressed along most or all the asset classes as well. Mm-hmm. Julie.
Yeah, I think I agree, of course, with what Courtney and Andrew said, and we're seeing exactly the same thing. I think this idea of an existential crisis really, for us at least at Bank of the West BNP, comes in mostly around climate change, and we've been so committed to that. I think the CDFIs are an important piece, but I think the idea of alignment, and that is, the cash management issues that corporations, are holding on to. There are lots of uncovered ways that we have to use capital in a more impactful way. And I think what we're looking at now is tapping into those new resources and being able to bring those together.
Great, thank you. Now, the second part of this question, we're going to go to the Q&A in about 6 minutes. So if you're in the audience and you want to send in chats, great. Let's please do that, and we'll get to that. We have 2 questions more to go through. One, the panel has touched upon already, a little bit on private investment, and Julie just mentioned a little bit about climate, but we might be able to go a little bit deeper on this. The question is, we are experiencing an existential crisis with the pandemic. Currently, the next 10 years are a crucial timeline for reaching the SDGs and addressing the climate crisis. Private investment plays a crucial role for reaching both. How has the current crisis accelerated, impeded, or otherwise impacted that progress? We'll start with Julie, and you already touched upon it, so go deeper.
Yeah, as I said earlier, we've been really lucky because the C-suite in Paris has been looking at this for decades. So where we are now is we are working on coming up with a plan to align with the Paris goals. We've already made it very clear, our divestment from fossil fuel, which is not an easy thing to do. It sounds simple, but it's incredibly complicated to unravel decades of contracts and partnerships and thinking about the ramifications of the workforce in Indonesia, for example. So all of this that's happening today is really speeding up our commitment to aligning with climate change.
Okay, great, thank you. It's interesting because in climate investing, there are sophisticated investors starting to create investment policy statements and mentioning the Paris goals, Paris Accord, and wanting to have a portfolio to look like it. And there's not quite a science there yet, but it is a kind of nice guide to think about. Do you want to add to that, Julie?
It's much easier. I think climate is the sector that it is. It's much more clear. The measurement is there. The tools are there, from mutual funds to private equity. There are so many options and so many metrics to apply. So everyone can be involved in this. What I always say is, it even matters where your cash sleeps. So every little thing we do, if you care about the environment, you really can make that difference. And that's where we have hope in this existential crisis. And as financial institutions, our job is really to help our clients connect with capital and to connect with that outcome that they desire.
Right, thank you, great points. Courtney, this topic about climate, SDGs, private investment, do you have some ideas here?
Yeah, absolutely. I think if you take the Paris Agreement as a framework, I think obviously the pathway towards decarbonization is just that, it's a pathway. And I think investors, there will be winners and losers over the next 30 years as the globe decarbonizes. I think that's, it's not going to happen overnight, unfortunately. But I think there's many different metrics and products, as Julie was referring to really help investors along that pathway. And that's much of the work that we're busy doing at Morgan Stanley is, of course, advising our clients on that pathway. And I think also when you think about the SDGs, I know it was early in the pandemic, but the UN came out and said that so far it had already negatively impacted 13 of the 17 SDGs. Obviously, devastating health outcomes, rising inequality, inadequate access to sanitation. And I think there's clearly a role for private capital to play there. I think obviously it's underpinned by good global public policy. We've unfortunately seen, I think, some pauses or reluctance to implement green recovery packages, although there's some more recent good news out of the EU, which I know Julie mentioned. Plastic bag bans more locally have also been paused, and I think the plastic waste topic is one that we're quite focused on at Morgan Stanley as well through our plastic waste resolution. But all that said, I think there's a significant role for private capital to play in shaping the recovery through really engaging actively with issuers and rewarding those and investing in those that are really focused on resilience. Whether that's on the environmental side or the social side when it comes to access to financial services and healthcare, job stability, et cetera. So I think, again, it's really a lot of these things have to work together to achieve the Sustainable Development Goals and global decarbonization. This is not something that private capital alone can do, but I think there is a huge role for private capital to play and a lot of nuances to consider along that pathway as well.
Great, thank you. Great ideas, thank you. Okay, miraculously, we're about a minute away from the Q&A, so we can do a lightning round. And so each of our panelists, the question is, what innovation, trend, or solution do you find most promising for the further advancement of sustainable and impact investment and catalyzing more private wealth towards urgent sustainability progress? We'll start with Andrew.
I would say convergence and simplification. So simplifying the terminology and the language and how things are labeled, and convergence and simplification of all of that, I think will help. And having the broad asset manager, asset owner, investor community come together around that.
Great. Yep. Thank you. Julie?
I go back to education and then couple that with the products that are available now. Courtney mentioned the CDFIs and other innovative products that have come out.
Great, thank you. And Courtney?
Yeah, last but not least, I think whether it's the data-driven applications like the one we've developed, Morgan Stanley IQ, or just the increase in thematic investment funds and products, I think the ability for individuals, families, institutions to transparently align their wealth with their unique set of impact goals is going to be essential for furthering the field of sustainable investing.
Okay, all good answers in the lightning round and in all the questions. Thank you so much for these thoughts. I think we're going to go now to Q&A, and Lindsay is going to monitor that.
All right, thank you, Richard, and thank you to all of our panelists. So we have a question coming in related to definitions in the space. And it was touched on around the different numbers in terms of volume of sustainable investment. And it's something that I know that the field has struggled with a bit. So question around, are you seeing improvement there? What does that mean for the space going forward? And if panelists can touch on some elements of kind of that harmonization and in definitions, which Andrew touched on a few moments back. Thank you.
Yeah, okay, so I always just say it would be best if we kind of got the Got Milk campaign for what we do, and we can all come together, but there's also groups that want to do their own marketing. So this is an interesting topic, and I think there is convergence, as Andrew said, but I'd love to hear, Julie, what you think about this.
You know, it's a bit of a pet peeve of mine because I don't want this to be an excuse to avoid directing capital in this direction. The definitions now are pretty clear. As my colleagues do, I'm sure spend a good part of my time explaining and simplifying. The information is there. It's not rocket science. And what troubles me is that when that maybe you know, the alphabet soup of definitions is used as an excuse to not put your capital where it can have impact.
Right, that's a good point. Now, what about, and I'll go to Courtney and Andrew on the data, because there's so many different ways to both cut the data and name the data. So not only at the high level of what we call this field, but also how we're measuring it. Any thoughts on that, Courtney?
Yeah, we spend a lot of our time looking at data. I think when it comes to especially, you know, thinking about private wealth clients and those on our platform at Morgan Stanley Wealth Management, I think it's really about translating the data into the issues that are most meaningful. I think the three lenses we often talk about when it comes to data are exposure to the issues you might have concerns with. So understanding companies and their practices, their products and services, typically based on the revenues that they're generating in certain sectors. I think giving clients transparency into that is one key dimension of data. As Julie said, that's not necessarily rocket science, but I think just the mechanics of pulling that all together can be a stumbling block. Then there's alignment to positive issues. I think similarly, it's looking under the hood at where companies are deriving their revenues, what policies they have when it comes to diversity, things like who is on their board, how are they compensating employees. I think those are the key metrics, and it's really about bringing them together in a taxonomy that makes sense and is translated to some degree into plain English. And then we also think a lot about intentionality. So what is the strategy of a fund? And I think this is where a lot of the market terminology does get confusing, but at the same time, I think a lot of the educational materials and things that, you know, all of our platforms are certainly putting out, I think have naturally started to coalesce around, you know, the clear distinction between what it means to restrict your investments versus impact investing is really about that private markets approach and really measuring your positive impact. Certainly within ESG integration is probably the broadest umbrella where there's lots of different strategies. And I think that really comes down again to platforms like all of ours, our due diligence colleagues really, you know, getting under the hood, understanding what asset managers are doing, and then translating that and communicating that clearly to clients. So I think there will always be a need for education, but data underpins that.
Okay, thank you. I see Lindsay on the line, so maybe we'll go to another question.
Yeah, so thank you, everyone. So in the interest of time, we do have time for one more quick final question, which is around reaching the SDGs, mitigating the climate crisis, and knowing that private capital is a key part of the equation, but certainly not sufficient to tackle all of these problems. So in that context, question around public-private partnerships and what role you're seeing, especially at this moment in time. So we have a very quick lightning round on that, but if the panelists who would like to raise their hand on that one would like to comment briefly on that question from our audience. Thank you.
Great question. Maybe I'll just go to Andrew first. Point to Andrew.
Yeah, sure. Look, I think there's huge scope for that right now, and I think the one thing from a private investor perspective is, where do you put that into your portfolio? Do you expect, based on which tranche of those structures, where are you going to be in terms of your return expectations, and how do you place it into a portfolio such that as an investor, the expectations that I have are met in the end, both on the financial side and on the impact side. So I absolutely think those are needed, and we will continue to focus on those, but it's just placing it into context properly.
Courtney?
Yeah, I would echo that. I think there's a huge role for public-private partnerships, particularly on topics that touch on infrastructure. Again, the plastic waste issue is one that we've quite closely followed and are focused on. I think there's a huge need for the blending of public capital and private capital and interesting structures to really make that happen. And again, I think there's certainly a role, as Andrew said, within a portfolio context to allocate to that in line with your impact goals.
There's been some real trailblazers in this space, but I think there's a lot more room to broaden it as well. Julie? Can you hear me? Julie, are you there? Maybe we...
Okay, we might be, I apologize, we might be having a few technical difficulties. So sorry for that, Julie, apologies. So with that, I know we are almost up on the hour here. I wanted to take a moment really to thank all of you today, to thank all of our panelists for taking the time in these unprecedented times to share your thoughts and some really important themes around adaptation, flexibility, democratization, and really acceleration of all of the work that you're leading. So thank you for that. Thank you to all of you for taking part in today's session, our Ceres 2020 participants. Before we adjourn, I wanted to take a special note to thank all of the sponsors you see here on the screen who have provided instrumental support for Ceres 2020. Please note that you will receive a recording of this session shortly. For our participants who are part of the Ceres 2020 digital program, please note another session, Investors Aligning with the Paris Agreement, Setting Investment Portfolios on a Path Towards Zero Emissions, will be taking place next week, June 9th at noon Eastern. To register for that and to learn about our other upcoming sessions, please go to www.ceres2020.org. Thank you again, everyone, for your time today. Our session is now adjourned.
Thank you.